Hello everyone, welcome back to another weekly market update from Xylostar with me and Mr. Median. This week we have some pretty interesting setups technically that might be actually a life-changing opportunity, especially after recent data that compelled both fundamental analysis and technical analysis to the same outcome. Wouldn't you agree on that, Mr. Median?
It was a mixed image about the labor market in the United States because of the ADP and NFP and different numbers from the PMI.
Perfect. Let's just dive right into it. All right, so welcome guys. Sam Raslan Azir, I'm a senior technical analyst at the Institute. If you haven't followed Xylostar education on TradingView, make sure to do because you'll be updated once any chart we post there is proactive. And actually we had some pretty accurate, as always, or let's say as usually, I would like to say as always, pretty accurate predictions on TradingView. So here we are kicking it off with Bitcoin. So we were expecting Bitcoin to consolidate in the past week. However, it did not retrace to the support. What happened is the market showed a little bit of momentum to the upside. Even though it was at resistance, it still has resistance and retraced to this resistance range. Now, on a longer time frame, you could have actually made some trades there, as in break and retest, whatever it is. On this time frame, it's still retraced to the same or almost around the same opening price a week ago. So from here, just due to this momentum, we can see that Bitcoin is forming this trend line, and from here we can expect another attempt to break this resistance, continuation and upward momentum. And this is actually pretty likely to happen, right? Or we might see Bitcoin retracing either to the support or potentially to fill up the fair value gap or do a break and retest at around the levels of hundreds and 3, right? We could see the market going here potentially before retracement to the upside, because Bitcoin is that asset that loves to grab liquidity. So this is about Bitcoin. Let's go to more interesting charts. Let's go to gold. Now, looking at gold charts, prior to the pause in the geopolitical tensions in the Middle East and the positive rebounds that came to the dollars a few days ago, late the previous week, we had gold actually going down, retracing to this support. But what's beautiful about gold right now, yes, technically we have a break above this downtrend line and this diamond pattern. So from here, there is a very good possibility for price to skyrocket to the upside. It might retrace a little bit to this support for a break and retest, taking liquidity from here, right, before a retracement to the upside. If we take an upper scale, in a bigger time scale, we would see that actually lows are connecting, forming for us a shape of an ascending triangle, and this aligns, or would be a little bit like here. If you go to the daily time frame, you guys do it as a homework. Do I have to do everything my own? Okay, no, I don't. So if we take a bigger look on a bigger time frame, we can see gold has fallen to the lower trend line of an ascending trend on a higher time frame. And historically, gold has been, let's say, performing for us similar patterns on higher time frames, and then it skyrocketed afterwards. So from here, technically, right, we have a very, very interesting long-term entry for gold, especially after this double candle pattern confirmation, right? So we might actually expect some fundamental reasons to shortly follow afterwards to give us that huge fundamental factor to push the price to the upside. So this is about gold. Keep an eye on it, guys. It's very interesting. Now let's go to EURUSD. All right, so basically, technically, EURUSD had showed a lot of factors in the previous week for retracement. However, it did not retrace. It pushed a little bit upwards above the bearish pattern that we had in the last week. However, even though we got this little bit of an up movement to the outside, market is still compelling to the trend line, as you guys can see. And also we had some very interesting rejection here, followed by double confirmation in candles that shows us this heavy pressure from the bearish side. So from here, we had this retracement. We can expect the market to retrace to the support. Could be a little bit up above the trend line, or could be coming to the trend line itself, or maybe it might just like form something like a hammer. However, the possibilities for EURUSD to retrace is way higher. The trend is still up, right? Probably for a good certain period of time. However, markets has to breathe out before they can take another breath in and continue in their momentum. So this is about EURUSD. Let's go to US 100. So US 100s. Of course, the trend is up, market is moving. We expected a little bit of a retracement. Market did some sort of retracements. Yes, it is showing some bullish strengths and the trend is still up, so we can expect a further movement back just to test the trend line and continue in an uptrend because of all these fundamental reasons of geopolitical tensions easing and people are more confident in investing in stocks. So this is about US 100 for the upcoming week, and let's go to Nifty50. Nifty50 is also forming a beautiful technical chart where we can see markets clearly breaking above resistance, making a retest, giving us confirmation right upon the trend line. So we can expect a smooth, beautiful momentum to the upside. Of course, keep in mind risk management is key due to whatever might happen in a short period of time. So that will be it about this week.
Greeting everyone, hope you are doing great. Amir Amidian here, Senior Fundamental Analyst at Xylostar, and today again we are going to review the financial market and the most crucial aspect of it, which is fundamental. So as usual, we are going to check the economic indicators for the last week. Last week, the main focus was on the US labor market as we got ADP, NFP, and job opening numbers. From the job opening numbers, we saw a strong demand and it showed a healthy labor market with the NFP numbers, but the ADP released extremely lower than expected and the previous numbers also revised down. Last week, we got the ADP private sector employment posted one of its weakest reading in the past 15 months, signaling a potential slowdown in private hiring momentum. Private employers cut 33,000 jobs in June, the first drop in over a year, driven by cautious hiring and not replacing staff. Despite this, wage growth remains resilient, according to ADP's chief economist Nella Richardson. US labor market remained strong with job openings at 7.8 million in May, slightly above expectations. Hires and separations held steady at 5.5 million and 5.2 million, showing stable labor market demand. US non-farm payrolls rose by 147K in June, with unemployment steady at 4.1%. Government jobs led gains, adding by 73,000. April and May figures were revised up by 11 and 5K respectively. Investor sentiment turned more positive by purchasing managers index. We got last week for the United States. Services sector showed steady growth and strong hiring in June, with the economy growing at an estimated 1.5% annualized rate in second quarter. However, elevated pressures and weak exports signal underlying risks. Business confidence remained cautious due to policy concerns, and inflation in services stays high, partly driven by tariffs. It all led the US indices to continue pushing up. S&P 500 closed at the highest level last week. From the European Union, Germany's construction sector remains in recession, especially in housing, despite a slight improvement in civil engineering due to anticipated infrastructure spending. Rising material and labor costs pushed input inflation to a 28-month high. Optimism seen in May faded in June as high long-term rates and deepening housing weakness weighed on sentiment despite ECB rate cuts. For the upcoming week, the main focus will be on New Zealand and Australian central bank because they are going to decide about the interest rate and cash rate. And by the way, we are going to get the latest FOMC meeting minutes for the next week.
All right, everyone. Thank you for watching. Don't forget to like, share, subscribe, comment, do whatever you want. If you have any questions, put it in the comment box and we'll get back to you on it. See you in the next one.